Is there any stopping gold in its bull run? Well, yes, there is. I'm going to tell you exactly what that is in this video, but why I think there's room for it to grow to $3,200 an ounce until it happens. Let's talk about it as we explore. Gold has broken multiple record highs, and it doesn't seem like there's any end in sight. Most analysts still believe that there's a lot of room for it to grow, and I am sort of shifting just slightly in my view. I thought we would not see $3,000 gold by the end of this year. Obviously, we're very near it again and probably going to surpass it. However, I believe now that there is going to be probably further upside for gold until a couple of things occur. And all of those things I'm going to be talking about evolve around stability, because gold is reacting to what's been going on in the news. That's really as simple as it is. And of course, a lot of it has enveloped itself around geopolitical uncertainty. And no question about it. Which is why central banks have been accumulating gold at record pace. And I've talked about that on this channel, and certainly have been an accumulator of gold myself. I believe all of us should have a little bit of gold, even at these high prices where they're at right now. And even if it doesn't come to pass that it goes at $3,200 an ounce, one thing is for sure: there's something about gold that maintains its value throughout the course of time. If we're at the top of the market or near the top of the market and you buy at the very top, well, just be patient. Be patient for sure. And if you want to get into gold, well, this is a great way to do it. Summit Metals, as the sponsor of the channel, has these really cool looking wallets. You can get 1 gram size bars now for a reasonable price, considering that they usually are not the most economical way to buy gold because of the premiums. But essentially, the spot price itself is swallowing up a lot of premiums these days. And Summit Metals has proven to be a very competitive bullion dealer in terms of pricing compared to other dealers out there. In fact, many times they're the low-cost leader. So check out Summit Metals and see if it's right for you to accumulate a little bit of gold. Notwithstanding, you may not feel comfortable buying gold at these prices, and I understand that. So you always have to do your own research and due diligence before making any decisions, because I have shifted a little bit of my viewpoints with regards to gold and where it's going, and me continuing to buy, but I am buying much less now at these high prices, no question about that. So each person is different, but understanding your own risk assessments is really crucial here as to what you're comfortable with gold. For me, I'm almost always comfortable with gold, no matter the price, because dollar cost averaging is key. And one of the reasons why I brought out these coins here to show you is to tell you what I paid for one of these. I don't really keep a lot of receipts, but I do remember some key purchases I made, because at the time, this was the most expensive coin in my collection. Of course, that has long since changed since then. This is a very low mintage, 388 mintage, and the first time that the Perth Mint has done a high relief lunar series, and this is the first one, the Year of the Dragon from 2012, Series 1, or Series 2 rather. And this particular coin I got from APMEX at $1,875 for this coin. It was a very high premium at the time, by the way. And it just goes to show you how things can change and shift in the market. Of course, this coin I got last year, and it obviously was a lot more, but still now, I think that this coin here, I believe, if I'm not mistaken, I paid just over $3,000 for, maybe a little bit less. So right around spot price, and it's a collector coin, collector gold coin. So it just goes to show you that patience, perseverance, and persistence, the 3 Ps, are crucial when stacking precious metals in general. And for gold as well, it's going to pay off. That paying off, by the way, for gold has really become profitable for many. In fact, if you just started stacking gold in the last couple of years, you have done very well as an investment. However, A word of warning, a word of caution, hence why I think that this bull run for gold is going to probably stop soon. And that is that, no matter what the price is, holding it for a long-term store of value is key, folks. It is key because it's not about making money. It's not about profits. It's not an investment, even though it has performed like one. Gold should never be viewed as an investment. And notwithstanding, here are the things that I think will squash the gold's bull run. Now, squashing a gold bull run does not mean that the price is going to plummet. It just means that it will probably stabilize to some degree. There may be some pullbacks, but I think that probably if it gets to $3,200 an ounce, we could see it maybe pull back into the $2,800, $2,900 range after the stability is reached. And that's the key, under the stability that I'm referring to. Let's talk about the first thing. What is concerning the markets right now? Tariffs, tariffs, tariffs. That is what is driving the price of precious metals upwards. A lot of gold has been moved from London into New York, and silver too, but gold especially, and that is driving up the price. Of course, some people theorize that some of that gold that is coming in is repatriated, or patriated rather, to the United States of America in order to add to the sovereign wealth fund and a gold revaluation and the like. And that very well could be, but it's gold moving around. That gold does not disappear or go away. It's just moving from one entity to another. Could that cause disruptions in the marketplace? Sure, it can. But once the tariffs become entrenched, then, in other words, they become stabilized, and we know what tariffs are coming in and out are going to be applied, then I think everything will calm down and settle. And I think that will be good for most Americans to know what's going on with regards to tariffs, because there's a lot of unknowns going on there. And I think some of that is purpose-driven, by the way, by the Trump administration in some of his negotiation tactics. That's just my feeling on it. But no matter what your view on tariffs are, once we get them entrenched or in place and settled, then the market can adjust accordingly. And I think that means that there's no longer instability, even though tariffs, which essentially are a tax, the market will adjust to those in some manner or form, which means probably that gold's price will stabilize as well. And I think the stabilization of gold's price will maintain a high price point, but I don't think that it's going to continue to climb much beyond $3,200 an ounce. In fact, I think it may pull back. That's number one. Number two, economic drivers. Once we see what is said at this next Fed meeting, which is coming this week, and what they're going to do and what their outlook is beyond just what they're doing in the actions, which will be to leave rates unchanged, more than likely. That's what most people believe, to the tune of almost 100% now. Believe they're going to leave rates unchanged, but it's the forward thinking, the forward guidance on what's going to happen at the next couple of meetings. Will there be interest rate cuts? Those interest rate cuts are generally good for gold and silver. However, they may not happen. They may be pushed back a little bit, which is going to keep prices at bay a little bit. And if we see good economic data that comes in, and we're starting to see some of that trickle in now, then that is going to be probably better for the dollar in terms of its strength compared to other currencies, and not so good for gold and silver continuing to rise. And gold especially, I think that it's been on high octane for so long now that something's got to give somewhere, and I think that's another factor that will come into play. And the other thing in terms of stability is central banks. What are they doing? They are continuing to add gold at record pace. It has not slowed down, at least not as much lately. It's continuing to rise. If the war in Ukraine, if there's a ceasefire that lasts beyond the 30 days, which is what is being negotiated right now as I record this video, then if that could cause some stability in the markets as well, and especially if there's agreements for the rare earth minerals in Ukraine and potentially even Russia, and we see the normalization of or at least some establishment of relations between the United States and Russia, that is going to throw a wrench into the BRICS, which are de-dollarizing. In other words, Russia very well may become, could come back into the G20 again, and we'll see. I mean, the normalization of relations and that type of thing is a stabilizing force, whether you agree with it or not, by the way. That's notwithstanding. I'm just saying that is something that could cause the price to stabilize and come down a bit. And I think that $3,200 gold is going to be right within reach as long as we continue on the path we're on with instability in the markets and instability in other areas. So we'll see how that plays out. That's just my opinion. You should not make any purchases based off of my opinion. Do your own research. I'm not, I think that we could see that $3,200 gold right around the corner or a couple of corners maybe, but it does not necessarily mean that it's going to happen. I've been right about gold in terms of my year-end price predictions. Every time I've done a prediction on it, I've actually undersold gold in that regard. But that does not mean that I'm going to be right this time about where gold is going. So, but nonetheless, it does seem like it's on a good trajectory in that direction. And so we'll see how it plays out. But nonetheless, let me know what your thoughts are down in the comment section below. One thing is for sure, the fundamentals of gold remain strong. And as a wealth protection device, gold is the best metal for that, I believe. It has done a wonderful job, has performed great in that regard. And so this is why I have made a decision since 2017 to focus more on gold, because you can pack a lot of wealth in a very, very small, tiny little package, such as you see here or here. It's great. You can get out, bug out really quickly with an ounce of gold or a couple ounces of gold in your pocket. And of course, liquidation is a difficult thing as far as getting change back. You can't. I can't go buy a loaf of bread with an ounce of gold, which is why you need silver. I think silver or something like that, if worst case scenario came into play and gold and silver were actually used as money. But most people aren't doing that. They're taking it and they're selling it at their local coin shop, and they're taking that money. It's highly liquid in that regard. So there you have it. Let me know what your thoughts are down in the comment section below. I hope you found this video informative, insightful, and educational. We'd like to extend a multitude of gratitude to each and every one of you for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.